Today, I'm going to focus on the Russian Ukrainian war. I'm not going to talk about the humanitarian issues which you see on our TV screen every night. I'm going to focus exclusively on the financial impact of what's been going on and what it means for investors and portfolios. The immediate impact we've seen is all Russian securities that we hold in our funds, whether they're bonds or equities, have been marked down to zero. That's led to about 0.2% reduction in value in some of our portfolios and a little bit less in some others. So meaningful, but not that significant. The much bigger impact are the sanctions that have been put in place in Russia. And Russia, as the world's largest country, has very large positions in several commodities markets. The commodities markets were already getting tight. We've been used to abundant, cheap commodities, and we're about to have to get used to scarce, expensive ones. Well, this is a crisis in that situation, and we're going to see some really serious ramifications, I think, in several commodities markets, and it's going to impact economies and our portfolios. Today I'm going to focus on two areas of commodities, oil and gas and agricultural commodities, and I'm also going to talk about the impact all of this is likely to have on gold. To put it in context, I'm standing here in Woking. There's recently been a £600 million investment in Woking town centre. A lot of investments like this have depended in part on low commodity prices. And I think huge aspects of our economy are going to be brought into play from the actions that have been taken against Russia. So if we look at the oil and gas market, total demand for oil is about 100 million barrels a day. And that's growing at about 1 million barrels a day every year as more and more people around the world obtain middle-class Western lifestyles. Now, during the COVID crisis, where people didn't fly and they drove much less, global demand only fell by 9 million barrels to 91 million barrels. To give you a context about how hard it is to get barrels out of global demand. Now, Russia accounts for 10 million barrels a day of global production. We haven't completely wiped that out, but it's very likely we're going to end up with a deficit of about 5 million barrels a day. Now, how do we cope with losing 5 million barrels a day in global oil supplies? Well, we're going to have to see demand destruction. It probably doesn't happen until we get to about $200 a barrel, which is almost twice the level that we're at today. Now, if you think about what form does demand destruction take, well, it comes in the short term, comes nearly always from recessions. So the money people have to spend to travel and the money that has to be spent to help manufacture and transport goods leads to much higher inflation and lower disposable incomes, and that ultimately leads to a recession. Now, remember, COVID only reduced demand by 9 million barrels. To get 5 million out, we're going to have to see a very significant effect globally, and I think people should brace themselves for that. The second thing is agricultural commodities, where Russia and Ukraine have very large positions in the global wheat market in particular, and Russia is a really large player in global fertilizers. Fertilizers were already feeling pressure from high oil and gas prices, and the removal of Russia from the global markets is actually likely to have a catastrophic effect on global supply. We rely on fertilizer to meet global yields and to feed the global population. The combination of Russia being removed, Ukraine perhaps missing a growing season, and less fertilizers, really we should expect far less food production in the next year or so. The last time this happened, we had riots in the Middle East. I think it could be a lot worse this time. And actually, at the very least, we'll see much higher food prices for everybody. The combination of high oil and gas prices and high food prices is highly inflationary and very depressing for economic growth. The final thing I want to talk about is gold. So one of the immediate things the US and European governments did when Russia invaded Ukraine is they moved to cancel, effectively, the Russian reserves that were held in those countries. So about 300 billion of the 600 billion of total Russian reserves were effectively overnight cancelled by the governments of those countries. Now, within the context of the Ukrainian war, this of course makes complete sense to put pressure on the Russian government, but within the global financial system it's actually very dangerous. So countries around the world, I think, are quite likely to look at these steps and start thinking whether or not the money that they hold in foreign countries is truly their money and something that they can expect to make use of at times of national crisis. It's quite likely to lead to an acceleration of one of the things that I'm concerned about, which is deglobalization. But in the immediate term, or the next year or two, I think it's going to lead to a very significant increase in demand for gold, which is the other classic reserve country asset used by countries. So I would expect the gold price in the next year or two to rise quite a lot. So in the context of our portfolios, we've got some very negative economic ramifications from Russia, which I think leads us to continue wanting to be defensive and protecting, waiting for a better time to buy risk assets. At the same time, I would expect gold holdings to make quite a lot of money over the next year or two. If you have any questions about today's video or anything you want to know, please get in contact with me. As always, I'm very happy to answer direct questions from clients or people who are interested in what we do. As always, I also have to remind you that I'm talking about investments, so your capital is at risk. And lastly, if you like what we do and you want to subscribe and always see it, you can just click on the Flying Colours logo here and follow the instructions. Thank you.